So you want to know if Tesla's going to stay on top of the EV market? Like, is Lucid going to be the one to knock them off their throne?
Well,
good thing you're here for this deep dive, because that's exactly what we're looking at.
right.
Based on that Motley Fool article you sent over from December 24th, 2024. And let me tell you, some of these insights are pretty surprising.
Yeah, the EV market, it's in a really interesting place right now.
For sure.
Like, you've got the potential changes to those federal tax credits, right?
Yeah.
And then consumer preferences, those are always in flux. Some people are even like leaning back towards hybrid vehicles these days,
Wow.
But even with all that, the growth potential in the EV sector, still huge, massive.
It's massive.
So picking the right company to invest in.
Oh, absolutely.
Is more important than ever, I think.
It feels like Lucid is hitting a few roadblocks, though.
Yeah.
Wouldn't you say? I mean, this Motley Fool analysis, they don't really hold back about their financials.
No, they don't.
They are burning through cash like crazy.
Yeah.
Almost $1 billion.
It's a lot.
In losses. Just in the third quarter.
Just the third quarter.
And their sales are nowhere near catching up.
Yeah, when you see that gap between losses and sales widening like that, it definitely raises some red flags, right?
Yeah.
I mean, early stage companies, they often do operate at a loss.
Sure, yeah.
But when you see those losses growing, while sales are kind of flatlining, it makes you wonder, right?
It does, yeah.
About how effective is their business model, really?
Yeah.
And can they actually scale up their production?
It's like they're trying to run a marathon before they've learned to walk. You know what I mean?
Yeah.
Their third quarter production, it actually went down from the previous quarter.
Okay.
And their projected increase for 2024, 7%. Not exactly what you'd call, a sign of a market leader.
No, definitely. I mean, scaling production in this EV market.
Yeah.
It's tough. It's a complex dance.
Yeah.
It's not just about having the factories, right?
Yeah.
You got to have the whole supply chain running smoothly.
Right.
The logistics need to be efficient, too. So seeing them struggle with that, with production, it could mean there's some serious operational hurdles there.
They've had to make some pretty interesting moves to stay afloat, haven't they? I mean, selling off hundreds of millions of shares.
Right.
And then that big cash infusion from Saudi Arabia. What's your take on that Saudi investment?
Well, it certainly raises some questions.
Yeah.
Because on the one hand, you need capital, right, if you're going to grow.
Sure.
But relying too heavily on share offerings, that can really dilute the value for existing shareholders.
Absolutely.
Over time. So yeah, relying so much on external funding. It definitely adds another layer of risk for potential investors.
Right.
Lucid's going to have to show a clear path to profitability if they want to instill confidence in the market.
Absolutely. And their debt-to-equity ratio, way higher than Tesla's. It's like they're using way more debt to finance their operations. It just adds to that whole financial risk picture, doesn't it?
Definitely does. Looking at these financial ratios, it gives you a much more nuanced picture of Lucid's overall financial health than just looking at revenue and losses alone.
So it's been a pretty bumpy road for Lucid so far.
Yeah, it has.
But before we jump to any conclusions, let's see how Tesla's handling this whole EV landscape, shall we?
Yeah, let's do that. Yeah. Tesla seems to be in a whole different league,
They really do.
Even with all the competition heating up, they seem to be handling it all pretty well.
Yeah.
Like this Motley Fool article points out, they had some pretty strong sales.
They did.
And good profit growth, too, in that third quarter.
It's like they're playing a different game entirely.
Yeah.
While Lucid's over there, struggling to just, make cars.
Yeah.
Tesla's churning them out and making money doing it.
Making money doing it, yeah.
Their production and delivery numbers are just, off the charts.
They've managed to build this massive manufacturing operation that's really allowing them to meet the demand.
Yes.
And their approach, it's really interesting. It's very vertically integrated, from making their own batteries to developing their own software, gives them a real competitive edge.
It really does.
That's a major factor in their profitability.
Hold on.
Okay.
Can we just unpack that vertical integration thing for a sec?
Yeah, sure.
What makes that so advantageous for Tesla?
Imagine it like this.
Okay.
Most car companies, right? They rely on all these different suppliers for parts and components. But Tesla, they control a huge chunk of their own production process in-house. So what does that mean?
Yeah.
More control over costs.
Oh, okay.
More control over quality. And they can innovate faster.
Yeah.
They're not stuck waiting on suppliers or dealing with price hikes.
That's brilliant.
Yeah.
It's like they cut out the middleman.
Exactly.
And keep all the profits for themselves.
Exactly.
And they're not just stopping at cars.
No.
They're full self-driving tech.
Yeah.
That's bringing in serious cash.
It is.
And they're talking about a robo-taxi service.
I know, right?
That's wild.
That could be a game changer.
It could be huge.
For the whole transportation industry.
It's like they're building this like electric and autonomous transportation like ecosystem.
It's pretty amazing.
While turning a profit. But we can't ignore the elephant in the room, can we?
What's that?
Tesla's stock price.
Oh, yeah.
It's sky high.
Yeah, it is.
Compared to, most companies.
Right.
Is it justified, though?
That's the million-dollar question.
Yeah, it is.
Tesla's high valuation, it's all based on their performance now.
Yeah.
And, what people think they'll do in the future.
Yeah.
Investors, they're betting on Tesla to keep innovating.
Right.
And keep dominating the EV market.
Yeah.
Whether that valuation holds up, though, it really depends on your perspective, right?
Yeah.
And your risk tolerance.
It's a bit of a gamble, isn't it?
Yeah, it can be.
I mean, you mentioned earlier that early stage companies, they often operate at a loss.
They do, yeah.
But Tesla's got this crazy high valuation.
Right.
Doesn't that make it riskier?
Yeah, I mean, especially
for someone who's like not in it for the long haul,
Exactly. A high valuation like that,
Yeah.
it means investors are already pricing in a lot of future growth. So if Tesla doesn't meet those expectations, that stock price could drop.
Of course.
And for investors with a shorter time horizon, that volatility, that could be a real problem.
Yeah, if we put these two companies side by side,
Okay.
the Motley Fool analysis
Yeah.
seems to be pretty clearly in favor of Tesla. They highlight the profitability,
Right.
the strong production numbers, and those ambitious plans for the future.
Sure, but remember,
Yeah.
investing, it's not about making quick decisions
Right.
based on a single moment in time.
Absolutely.
It's a process.
We're not trying to predict the future here.
Yeah.
We just want to give you, the listener, the info you need to make informed choices.
Exactly.
So where do we go from here?
Well, this is where the real work begins, right?
Okay.
We've laid out the facts, highlighted the differences.
Between Lucid and Tesla.
Right.
Yeah.
And we've explored some of the challenges in the EV market. Now it's your turn. Right. You got to consider your own risk tolerance.
Right.
Your investment timeline.
Yeah.
And your overall portfolio strategy.
You got to figure out, are you the type of person who wants those short-term gains?
Right.
Or are you in it for the long haul?
Exactly. And are you comfortable with the risks that come with a newer company like Lucid?
Yeah.
Or do you prefer the kind of stability of a more established player like Tesla?
These are the questions you got to ask yourself.
They are.
And don't forget,
the
EV landscape, it's changing all the time.
It is. Things can change quickly.
Really?
You got to stay informed.
Yeah.
Keep up with the industry trends and be ready to adapt as needed.
So this deep dive, it's given us a lot to think about.
It has.
But it's really just the beginning, isn't it?
It is.
It's the start of your own exploration. We've talked about a lot today.
Yeah, we have.
Lucid's financials, their production woes, that interesting Saudi investment.
Right.
Then we looked at Tesla. Their continued success, those big plans they've got, and that's
stock price.
That's stock price.
It's something else.
It really is.
It's like we're looking at two companies on totally different paths.
Yeah, it is kind of like that.
One's climbing uphill, trying to get a foothold in this crazy competitive market. And the other one, they're cruising.
Yeah.
Enjoying all the rewards of,
being the early bird.
Yeah, exactly.
But like you said before, this EV landscape, it's always in motion.
Always changing. Yeah.
So the leader today might not be the leader tomorrow.
Exactly.
So as we wrap up this deep dive, I got to ask.
Okay.
Does Tesla's dominance now guarantee they'll stay on top in the future?
Yeah.
Or could Lucid, with those fancy luxury EVs, carve out their own little corner of the market and
disrupt everything.
Shake things up.
Yeah. I think that's the question a lot of investors are asking right now.
It is.
It reminds me of something that happened earlier in my career.
Okay.
There was this company, a real big player.
Yeah.
And I was positive they were gonna,
just keep winning.
Yeah, keep winning forever.
Yeah.
But then...
What happened?
This tiny competitor came out of nowhere with this completely new approach.
Wow.
And within a few years, the whole industry was flipped on its head.
It just goes to show you.
It does.
Disruption can come from anywhere.
Exactly.
So even though the Motley Fool analysis, they're favoring Tesla now, based on what they're seeing, we got to remember the car industry. Yeah. It's been shaken up by newcomers before.
Oh, so many times.
And who knows, maybe Lucid's focus on those high-end EVs.
Yeah, yeah.
Maybe that's the key, right?
Could be.
It's a whole segment of the market that Tesla hasn't really tapped into.
Right. And consumer tastes, they change.
They do.
New tech comes along.
All the time.
And government regulations.
Oh, yeah.
It could really change the game.
So the question isn't really... who's winning right now? It's more like
it's more about
who can adapt and thrive when things get unpredictable.
Absolutely. So for you, the listener, it's about looking beyond the headlines.
Dig a little deeper.
Yeah, dig deeper. Look into these companies, their strategies. Understand what's shaping the whole EV market.
That's what we've been trying to do with this deep dive.
Yeah.
Give you the tools to make those decisions.
Exactly.
We looked at the financials. Explored the technology.
Right.
Put it all in context. Now it's your turn.
Yeah, connect the dots.
Figure out what works for you.
For your own investment goals.
Exactly.
And remember, investing, it's a journey.
It's not a sprint.
Not a sprint, no.
It's a marathon.
A marathon, yeah.
Stay curious out there.
Keep learning.
And don't be afraid to question.
Question everything.
Everything you think you know.
This EV market, it's exciting.
It really is.
The future of transportation, we're seeing it unfold right now.
Who knows what's going to happen next?
Right.
Maybe Lucid will be the next Tesla.
Maybe.
Maybe someone new will come along and surprise us all.
We'll be here either way.
Breaking it all down for you.
Helping you make sense of it all.
So until next time.
Yeah.
Keep digging deep.
Keep asking those questions.
And happy investing.